Story for oil. Will continued supply discipline by the producers continue to support prices? We're joined by Phillip Streible, Chief Market Strategist at Blue Line Futures. Phillip, thanks so much for joining us as ever. Happy Monday. You do, in the short term anyway, see upside for oil.
Yeah, we do believe that oil prices will continue to move up. It's really a reopening play, and it's been a very good play. I mean, since about last November, we looked at the upside of oil. You know, it's broken through 50, 60. We still do believe that oil should peak into the second half of the year early on, probably right around September. We have an upside target, $70 to $72. It's really how fast, how good they can roll out the vaccine, you know, what kind of positive reinforcement it gets, and then that amount of travel that continues to pick up building around that.
So if oil, you see oil getting above $67, what kind of time frame there, Phillip, though? How long will that take?
Relatively pretty soon. I mean, we believe that that'll happen in the first half of the year. The second half is where things get a little bit more complicated because Saudi Arabia will come back online. They'll start pumping out oil at a rapid pace, and it's probably going to settle back down on the year. We think year-end target closer to $60, $65.
Yeah, it's fascinating, isn't it? Because the Saudis, they're only going to forego this revenue, leave the money for others potentially to pocket for so long. They will be anxious to increase their production.
Absolutely, they will. They just don't want to jeopardize, you know, oil's recovery. If you look year to date, oil prices are already up about 26% on the year, gasoline up about 40%. And I mean, no, we're definitely feeling it at the pump. I filled up this morning. The cheapest grade gas was $3.87. With a higher grade at $4.50.
Talk to us about silver. Now, you think silver's got a problem. It's keeping bad company. Gold. Nothing wrong with gold, of course, in particular. But if it could start tracking platinum or copper, silver would do better. Sorry.
Absolutely. I mean, since the pandemic low back last March, copper's been one of the best performing commodities, and it still should continue to elevate higher. If you look at the chart pattern, technically, throw it on a weekly chart, you'll see there's a bullish pennant there. We should break out to the upside, especially with the infrastructure bill. We've got quite a significant uptick in demand for electric vehicles and green energy initiative. Those all require copper, platinum, silver, palladium, rhodium. So all these metals should be traveling in an upward trajectory. The problem with silver is that it's, you know, often perceived as the poor man's gold. We're seeing liquidation in the gold market today with it breaking down about 1.5%, and it's dragging silver with it.
Now, you reckon that China is already in a slowdown or looking at a slowdown. Do you think that is that partly because the government wants to dampen any possible asset bubbles?
Well, the reason why China went into a slowdown is because they came out of lockdown restrictions about 3 months ago in December. So they've had a period of accelerated growth up until about March. And then since then, now their year-over-year comps aren't going to come in line. If you pull up the Shanghai Composite, you'll see that it's been declining from its peak. That's why we believe the back half will be much more challenging for the U.S. because of the fact that we'll come out of our lockdown restrictions over this next quarter. But after that, the comps on any company, especially stay-at-home stocks, are going to face a lot of challenges. You know, China, they've been ahead of the curve on this thing because they got COVID first, so they're out of COVID first, and that's the reason why they've got a slowdown going on.
Let's switch to crops. We are going to get farmers' planting intentions on Wednesday of this week. Corn, soybeans, wheat, are you long any of those, Phillip?
Yes, we've been, if you look at the chart pattern on corn, it's been consolidating for quite a bit. Corn, they're expecting 93 million acres planted. On the beans, it's going to be 90 million. You know, grains have been just a fantastic play to the upside. They've had unprecedented demand out of China, good exports. The U.S. farmer, you know, really they need to take advantage of this, start hedging some of their new crop and lock that in case we do get this excessive, you know, we get this excessive planning. We've got a slowdown in China, so the demand structure may change, especially going forward.
That's interesting. Phillip, I think we'll have to leave it there. Give us, we've less than 30 seconds. Give us one commodity trading idea for the week ahead.
We still like platinum. The upside platinum fell down about $30 today. We've been playing the range from about 1155 on up to $1,200. So I think that that's a good tradable range for traders, for this week.
Philip, thank you very much indeed. Have a great week yourself.
Take care.
Phillip Streible joining us there. Always great to have him. He's with Blue Line Futures, Chief Market Strategist.